maximum growth out of not pushing a demo account, not pushing an entry button, okay? Not going with a live account because that's the best way to learn when it's not the best way to learn. It's the worst thing you can do. In my opinion, and my experience as an educator as well, it's been my observation that those individuals that start trading with money, whether it be the most insignificant amount of money versus not learning how to worry about the outcome in terms of monetary reward or pain, loss, the ones that do it without money tend to be quicker to profitability, more long-term, consistently profitable, and they're not plagued with the problems that even myself as a trader, I still have impulses. When I see certain moves, I know that the 20-year-old ICT wants to go in there and go 30% of equity on that one trade, just to say, I killed you. I slayed you. You had no answer for me coming in and taking it and plundering you. That's a thing that comes up many times throughout the week when I see a setup that is absolutely easy. And I'll show you what easy looks like. And that's the whole point of why I'm doing it this year, because I want you to focus on those conditions. Because technical analysis leads us as new traders, new developing speculators in the marketplace. We are invited many times to do things because there's lots of ways, different roadmaps and routes to get to a winning outcome. And it's not limited to my stuff, okay? Anything that's a catalyst that makes a decision, whether it be a random number generator, flipping a coin, last time your elbow hurt, the price of cattle went up. There's traders that do that kind of stuff. And as long as they manage money, you could potentially, in theory, be profitable, but the outcome isn't really linked to what you believe the catalyst was for you to get into the trade. I want you to think about that throughout the year. So every time we're doing our live sessions, I want you to, at the end of it, right when we're done, don't postpone it. I'll do it when I get more time. At that moment, I want you to record in your journal what your observations were. What things that you felt while price action was being delivered, and where I'm commenting and where I'm placing your attention. And I want you to focus on doing that without having any real negative reflections. So while I don't sugarcoat the realities of trading and what you're going to have to go through, in your journal, you absolutely are sugarcoating it. Because you want this book that you're writing in your own words, in your own observations, your personal experience. This year, each of you that take on this endeavor every single week with me, if you journal it, you're going to have the best trading book there's ever been, because it's going to be uniquely linked to the way you think. It's going to be uniquely associated with your personal experience that no one can download and transfer to you. You saw it. You were there. You watched it happen. The good, the bad. When it was on point, it was precision like you could have never imagined. And times when you thought it was going to be precise, and maybe I thought it was going to be precise, it doesn't deliver as we expected. You're going to have all those experiences. And that's something that you're going to encapsulate. That a book written by someone else and the things that they picked as salient for the book, you're going to have the real deal. This is the trading book that all of you would want to buy, but you're never going to find it on a bookshelf. I wanted you to think about what it is that you know and what it is that you believe about the markets right now. What analysis concepts, what traditional approaches have you adopted, used, discarded? I can look back and tell you that I've gone through a lot of different approaches and placed a great deal of emphasis on things that have really no bearing on who I am as a trader today. Just about every mentor I had has their fingerprints on me as the trader but very few elements really bleed into the actual things that I do trading. So I'm thankful for the mentors that I've had, but none of them taught me how to trade like I trade. They gave me the little bump, the little nudge of, focus over here, look at this over here. And it got my attention, like Linda Raschke, the whole idea of stop hunts, which, I just thought, this is what happens when you're wrong. When you put your stop loss in the wrong place, it gets hit. And then because of the approaches that she taught with her book with Larry Connors, that whole premise was how I built the confidence of going in, selling short a run above old highs or buying below old lows. And that was my version of Turtle Soup. It's not the same as her book titled Concept Turtle Soup, or not even Turtle Soup Plus One. It is a good book. I think you should have it. Every trader should have it. There's a lot of things in that book that I don't subscribe to, but it helped me. It helped me understand a concept about trading that was alien to me. And I know some of you had those things about my content. Most of you, at some point or another, look at all of that material on my YouTube channel and you think, wow, where do I begin? What do I do with all this? I just want to learn how to make money. Can he just tell me in 5 minutes how to do that? I can't do that in 5 minutes, but I want you to focus on how I'm doing it literally over my shoulder when we do our live streams. Think about what I'm not, and not while I'm doing it, afterwards. These are all the things that you're going to record in your journal. You're going to note how little that you need to focus on to find a setup that will yield potential points or pips if you're a Forex trader. Everything that I'm going to be teaching over the medium of the E-mini S&P is absolutely applicable to stocks. It's applicable to Forex. It's applicable to cash markets if you're not in the futures market. I've been wrestling with the idea of how I know a lot of you don't have access to the futures markets, and you like to trade the US 30 instead of the Dow futures, or the US 100 cash market instead of the Nasdaq futures, and the US 500 versus the S&P E-mini. I've thought about how I was going to do that. So I think what will have to happen is I'll have to create a layout. So that way when I'm observing things in ES, and when I interchangeably go back to the NQ chart, so that way you can see and compare and contrast, you'll see also on my chart how I'm plotting and posting the SMT. I've seen a couple of people ask, how do you put that on there? I'll show you. I'll walk you through it that way you can see what it is I'm doing, how I dress my charts up, so that way you can do everything that you see me doing with my charts. You're seeing one template of the 8 monitors that I have. Now, don't think, because I said 8 monitors, there's 8 in front of me. Okay? I have supporting monitors to the side of me, but they're not important. The ones that I'm actually working with, they're making the decisions on what it is I'm following, what I'm focusing on, they're right in front of me. And you only need the template I'm going to show you. If you can't have the template where it has the 3 charts on one screen, you can toggle through just by changing the time frame. Don't think that you have to have it exactly like I'm saying. But a lot of you ask for this, so I'm showing you. It is not the secret to it. It's whatever you're comfortable with. If I had 8 screens on my desk in front of me, don't equate that my experience or my success in being able to do this is attributed because I have 8 monitors. Because I can literally be walking around. I tell you not to trade on your phone, but because I know what I'm looking for, I could trade on my phone. But that's not an invitation for you to say, well, ICT said he can do it, so therefore I am his student. I should be expected to do the same thing. That's not true. And I'm not saying that. But I'm saying to combat the idea that you have to have all of this real estate in front of you in terms of monitors. You don't. So don't let that be an impediment to you, or a point of contention for, oh, well, I have to have extra things I can't afford. And that's the perfect excuse why I'm going to fail. No. One laptop, When I'm doing all of my video work and I'm recording, I'm using a laptop. When I'm talking to you, well, I'm not talking to you now with a laptop, but if I'm doing live streams, I'm going to be on a laptop, one single laptop. But I have a layout that I'm constantly going to be referring to. And you'll see exactly what I mean by that. Most of all the things that you're worrying about or have worried about when trying to learn from me or watching videos and such, you're going to see how all of that was just needless anxiety. You're trying to make everything applicable to every condition in the marketplace on any given time frame when it's not necessary. It's much like it was when I first learned technical analysis, the traditional approach to technical analysis. I wanted to apply everything. Every trade had to refer to commitment of traders. Every trade had to have at least 3 moving averages. It had to have 2 oscillators, because one oscillator might be lying, so I have to confirm it with another oscillator. And if they agreed and there was a divergence there, then and only then the trade was really good, because I had 2 witnesses behind the idea, right? So more isn't better. It's not. And my charts only get bloated when I'm annotating levels for you to observe. And that may or may not align with what I think is going to occur in price. And it doesn't mean I'm going to be right all the time. So don't be tricked into thinking just because you've seen almost 100% accuracy for a day-by-day basis for as long as I've been going, that I won't get it wrong. I will. It's absolutely going to happen. And in fact, I'm looking forward to that, because I want you to see that it's going to be very infrequent. And that's the benefit. So you're afraid of being wrong. Some of you out there that don't like me think I've been afraid to do that. I've not been afraid to do this. I just don't want to do it prior to now, because it's easily copycatted. It's easily parroted for people that don't know me and they're running channels and running services. It's going to be very easy for them to repeat what I'm saying. If the audience that they have in front of them is not aware of me doing it for free out in front of everyone, and I'm accurate, it's going to make them look accurate. And that's the whole reason why I didn't want to do it. But this year, I'll give you my year. I don't care. Okay, I can give you a year and it still won't take any skin off my back. And it will hopefully help a lot of you in the course of doing it. So by traditional analysis or market analysis, that really entails a macro analysis, looking at the higher time frame, monthly, weekly, daily. What's the quarterly shift that we're presently in or about to transition out of? Seasonal tendencies, very long-term macro perspectives, where the market is really likely to be going on a higher time frame. That doesn't really impact a lot of the day trades that I do, because I can be buying and selling in the same day on any given day. I could literally flip a quarter and say, okay, if it's heads, I can only be a buyer today. And then I could just make money doing buying in a down day. These are all things I've done over the years to teach myself that, yes, there's an importance behind narrative and bias, but I can trade without a bias. You will learn how to do that this year. You do not need to be painted into this box that sometimes it makes you feel like when you're watching my videos, like this is the only way you can do it. No, there's lots of ways. There's lots of ways. Price is constantly moving. And you're going to see the plethora of types of setups that are available to you. And just because I'm not taking them doesn't mean that they're not valid. I'm not worrying about that one. I'm looking for something else. I'm looking for a different cherry to pick, if you will. You might like a plum, okay? You might like an apple. You might like an orange, okay? There's a different variety out there, and I'll show you how to bring your own personality to it and not be forced into any particular mold. So that way it feels more organic to you. It feels like it's your method, your model. And while I helped you, you've adopted it as your own. And it's really important to have that as a trader, because copycat trading doesn't work. So the market seeks that liquidity. And I'm going to teach you how to identify those arm wrestling matches where the fund manager's positions, Wait a minute, Michael. You said fund manager? These people are the billionaires. Yeah, they are. But their trades aren't high accuracy. They're trying to make 15 to 25% a year. You know, what some of you are trying to do in one morning session. They're not trying to do a whole lot. And they can weather being wrong a lot. Because number one, they're using other people's money. They know there's a sucker born every minute. Every time the market goes up, oh man, somebody made money today. I wish I could. Let me put some money in my 401k. Let me go in here and put my money in this fund over here. So there's always a new influx of suckers coming into that. This market is constantly bringing in people, and it's throwing people on their rear end through loss, fear, margin calls. The industry's constantly got a revolving door, but it's never going to run short of new people wanting to come in. Why? Because your jobs suck and they never pay enough. I don't care who you are. I got surgeons in here that make over $700,000 a year, and it ain't enough. Okay, come on. So there's always going to be greed. So this approach to trading is never, ever, ever, ever going to stop working. Because these same mindsets that come in are indoctrinated to do the same stuff that these books talk about. And these